whole lesson is going to be focused solely on TradingView. I'm trying not to make it too long and too boring and too complicated. And every 5 to 10 minutes and stuff, if you guys could, raise your hand or drop a question in the chat. It's a small group today. If you just want to interject, please do. Because the objective is what I want to do is just kind of to look at these charts from a beginner and just put myself in a place. This is the first time, I opened up a Coinbase trading account. I've funded the account. I connected my TD Bank account on my Bank of America, and I've sent, some funds to my Coinbase account, and I'm ready to trade. And someone told me that I need to buy some Bitcoin. So I want to do some technical analysis. So the first thing you want to do, as we had mentioned and stuff, is you want to have TradingView. That's sort of your hammer. If you're a carpenter, you need a hammer, no matter what, whether it's going to be a power hammer or a hand tool. You need a hammer when you're a carpenter. And the same thing as a trader. As a trader and stuff, you're going to need to do some TA, some technical analysis. And what TradingView is just the industry standard that we use and stuff to do analysis. It has pulled feeds and stuff from almost every exchange and every DX, decentralized exchange, that it just pulls feeds of all the different currencies and what exchanges it's traded on. So for example, like when you are looking on your app phone on CoinMarketCap and you see an article about a particular stock, not stock, but cryptocurrency, and you're interested in it, well, you would go to, say, for example, you're going through CoinMarketCap and there's a great article, positive news about Matic, Polymatic. You would just go to your TradingView and, you go here in the top left corner and then you just type that in. You just type in Matic. And it will tell you all the different exchanges that Matic is traded on. And in addition to that, all the different pairs that it's traded on. And over here on the right column is all the different exchanges. And here is the pairs of Matic Euro. We have Matic BTC Bitcoin, Matic USD on Binance. So that's why TradingView is just so important and stuff. It's really just kind of like the gold standard of the industry. So I'm going to put Bitcoin USDT back up here. All right, so as I said, we just got, our Coinbase account funded and we're ready to trade. So the first thing I want to do is look at market structure. So I put up, typed in BTC USDT, which is Tether, BTC to Tether. I put that up in there. And what I was doing is just looking at it on a monthly basis. I went all the way back to 2000, as you see at the bottom of the screen, 2018, all the way to the present. And this is a monthly. Up here, I put in monthly. So these are all the different time frames that you can utilize. So what I did was I selected monthly. So each one of these candles here represent a month from 2018 to 2022, February, which is right here, February 22. So now if you look at these candles and stuff, excluding the green line, we'll talk about that later. So, but what I did was just look at the market structure and say, hey, this cryptocurrency Bitcoin, is it going up or down? I mean, and you guys, if you want to type it in the chat or just, speak out loud, we'd love to just hear, what do you think? If you're looking at Bitcoin from 2018 to the present, is it trending up? Is it trending down? Is it a bullish, or are you bearish about it?
It's been going up.
Exactly. So as you can see, we go back to February 18 and stuff. It was at $14,125.50. So I'm a lefty, so excuse my handwriting here. I try to draw a straight line from here to the next highest point. That's what that yellow line is to represent. So the next highest point is $51,000, which is in April of 2021. So when you look at that, so from 2018 to April 21, which is what, about 3 years, that stock has more than tripled. I'm sorry, not stock. Now I'm on stock. So the cryptocurrency has more than tripled, went from 14,000 to 53,000. So it's obviously this is indeed a bullish situation. Now, when you look and see, and then that I drew that little short line there, is that what I did was I wanted to know what's the all-time high. So the all-time high, it looks like it's about $67,000, which happened around April 21st, and it happened again in November 2021. So just a few months ago, Bitcoin was at its all-time high. It happened in April 21, and then again in November 21. So, all right, cool. So I'm looking at this, so I'm like, okay, so it's bullish. So I'm liking this already. So another thing that I'm looking at on this chart, I'm just looking at the volume. Just seeing what the volume is, look out. And for any of you guys who do statistics or bar charts and stuff, if you would look at this bar chart right here, and if you can see this little gray line, and maybe I like to get some input. What do you think the volume is? Does the volume go up over time? Does it stay flat? Or does it go down over time? What do you guys think? These bars, which are red and green, just all of them. So looking at the height of the bars, which is the indication of the volume per month, when you look at it over time, is it increasing, decreasing, or does it just stay flat?
It certainly looks like there's the volume is more consistent towards today, because the slope is more straight. But when you look at earlier, it seems like it was still going up and down, I guess.
Okay. So remember, this is a monthly chart. So each of these bars represents a month from 2018 all the way to 22. So when I look at it that from here, from 2018 to 2020, it does look like it is pretty much as the volume has remained the same, give or take. But when I go and look at it from 2020 to the present, there seems to be much more interest in there. So also now I want to go over to March 2020. You see this red, does everyone see this red bar volume here that I'm actually landing on now? You guys see that? Okay, that date is March 2020. Does anyone know the significance of March 2020? Okay, that's when the pandemic started. And as we can see on that particular month, that was that was probably the highest traded month in the history of Bitcoin. From, if you go back to 2018 anyway, Bitcoin traded before that, but on this particular exchange, it only has data from 2018. So you look from 2018 all the way to the pandemic, when the pandemic started, that was the most volume that was traded in a month's time, and it was selling pressure. And that's what the red represents, is a lot of selling. But besides that, after March and stuff, what we saw is just that there was just a lot of upward trending, higher highs, like month after month after month during this pandemic and stuff. Bitcoin just kept increasing, kept having higher highs and higher lows all the way up. So again, these are just extremely bullish signs and stuff that you're getting and stuff, that the volume is increasing. That means more people are adopting, more people are trading, more people are interested, and this currency is going up. So now we're looking at this on a monthly basis. So now what we're going to do is go back, and monthly, we go and change it to weekly. And I'm going to try to shorten this out so we can get a better picture of it. So now we look at Bitcoin on a weekly, and we still have those same lines up there. Remember, we drew a line just to try to understand the market structure. We already see that we established on the monthly chart that it was bullish, but even on a weekly, we can even see it better of the bullishness on a weekly chart. And then even on the volume. Now look at the volume now. This is each one of these bars represents a volume. Now we can even see better the volume on a weekly basis of how it has increased over time. And again, we go to here, which is March 2020, and we see just from March 2020 of how it has increased all the way up until April 21. And then, you see it does tail off a little bit. So again, what you're seeing is that there is just more activity, more volume. And that's something that's really important, especially for you guys when you start investing in altcoins and you start investing in projects that you heard about on social media that, you could do a 50x your money. These are kind of the features and stuff that you want to look, or characteristics, I should say you want to look for, is what kind of volume is in that particular protocol, that particular coin and stuff, that token. Like what kind of volume is it that's being traded? And right up here will tell you, here in the top left corner, when you hover over it, will tell you on that particular time frame what the volume is like. So that's also a very important indicator to look at. So next we want to go down, now we want to go down to the daily. Select daily. And again, we're going to shorten this up, try to shorten this up so we can just see it better. We're zooming in. As you can see, we went all the way from the monthly to the weekly. Now we're down to the daily, and we shorten this up so we can just, again, see it over a large period of time, but on a daily chart. And then now we're going to stretch it back out. And what we're going to do is now try to zoom in on a daily. See if I can make these candles bigger and slide it down. And now what we're going to, since we want a daily now we want to zoom in and see if we can zoom in more so we can look at this a little better. So now we want to zoom in, and here we are now in February. We're in February 8th, which is today. So this is our point at where we want to look at today. And if we just go back a few months, let's just say we go back to the beginning of the year, to January 1st, 2022, and we start looking at these candles now, and we start seeing that as we went into the new year, Bitcoin just began trending down. This green line represents the moving average. So as you see, as we went into the new year, Bitcoin began trending down. And then when you see these candles right here, when you see candles that are sort of lined up straight across, this is what we call consolidation or a market correction. When you just see things moving sideways, like right here, and then again right here. This is just like consolidation where there's not much changing at all in the price. It's just sort of bouncing sideways. But when you get here, you see this impulse. This is like an impulse candle right here, where you see that now there's an impulse move of Bitcoin shooting down. This is on January 5th. There's an impulse move of Bitcoin shooting down. So does anyone, first of all, before I continue on, does anyone have any questions about what we discussed so far, about the monthly chart, looking at market structures, determining bulls and bears? Does anyone have any questions?
AB posted in the chat, do you know the formula that makes up the crypto price?
Which price? The price of Bitcoin? The prices of Bitcoin and any other general cryptocurrency asset is the price is determined by supply and demand, which is basically price action. Is the people who are bidding and putting in bids and offers is what determines the price. But if you're looking to want to know, how to price it and how to compare one cryptocurrency to another, you look at market cap. You look at the number of coins that are outstanding versus whatever the market price is, and you divide the two to get market capitalization or try to better understand and compare, one cryptocurrency to another. But generally speaking, the price is determined by the market. As you can see, I hope you guys can see my screen over here on the right-hand side. These prices, cryptocurrency trades 24 hours a day, 7 days a week. And it's just the market, people putting in bids and offers that determine the current price of a currency. Was there any other questions you guys have?
I don't see any in the chat
No.
so far.
Okay. So what we see now, like we talked about the, consolidation, and then what you see here on January 21st, which is probably about 2 weeks ago, another impulsive move by Bitcoin was the bears came in, and there was a huge push down of selling of Bitcoin on the 21st. And then after the 21st, what you see is pretty much a lot of consolidation. It's trading below its moving average and just a lot of consolidation. Now we move over here to last Friday, which was economic indicators. The United States government unemployment numbers and stuff were released, and the unemployment numbers and stuff were extremely positive. And because of that, you saw a huge rally in Bitcoin. And as you can see, for the first time in a long time, you see this bullish engulfing green candle that burst above the moving average. And if you go back many weeks, you don't even see a large green candle, let alone one that's above the moving average. You would need to go all the way back to November 8th to even see an engulfing candle above the moving average. So this is a huge signal. So then what did you see? That was Friday, all weekend long. You still see Bitcoin just kind of chugging along over the past 4 days above the moving average, which is huge. And now that's why you see the prices at $44,000. But now the concern is a lot of people are concerned that there's economic numbers that are expected to come out this Thursday, which is the consumer price index, which is an economic indicator which lets us know what consumers are paying for goods and how they feel about goods and stuff. It's sort of an indication of what people are feeling about inflation and what they're paying for a given basket of goods across America. So I believe that people are waiting to see what Thursday's numbers are like. Usually comes out Thursday morning. And from those numbers and stuff, if those numbers are a confluence of what we saw last week, and those numbers are better than what people are expecting, I think that Bitcoin will continue to rally up. If those numbers are contrary to what our expectations is, you want to see Bitcoin now begin another reversal and potentially trade below its mean. Now, when we talked about market structure, and another thing that's really important is support and resistance. When you look to make a trade and stuff, you always want to try to get things as cheap as you possibly can. So like right now, it's trading above its moving average. So now, in my mind, as a trader and stuff, I look at this as being expensive. Why? Because it's trading above its moving average. What is the moving average? Just look at it as the most recent average price for a particular item. So when I look at this, I look at it that Bitcoin is now trading above its moving average. So remember a couple classes ago, we talked about putting in limit orders. So now if I wanted to buy Bitcoin right now, what I would do is go in and put a limit order in, and I would put a limit order in for $40,496 to try, see if I can get it at the average, at the green. That you see, guys, see where that green moving average is. I will put an order in for there. And then remember we talked about this engulfing candle. I would put an order in right around here. You see, this is a support line. This dotted line right here, if you look at it, go to the left from here, from here, and you look left, you see there was a lot of buying at that particular level. This seems to be, that's your, excuse me, that's your demand zone right there. Because as you can see, there's a lot of buying that was done at that level at $36,500. So that's your demand level, and that's also, your demand zone, and will also be your support level as well. So any trade that you want to put in, you should look to put in trades from this point here to your moving average down to here. And when we talked about dollar cost averaging is always the best way to invest. So maybe you may invest in, if you got $100, so you may want to break that $100 up into 5 parts and invest excuse me, and look to buy at 5 different prices in between this $40,496 and this price here of $36,496. Then you may look to just want to put in pricing rep in that zone right there. What does that do? That helps you get your average purchasing price down that you're buying Bitcoin. And then again, just think, it's the cheaper you can buy it for, the more Bitcoin that you can buy and accumulate over time. So does everyone get that? And if there's any clarity needed, definitely let me know.
So AB writes in the chat, weight is the demand zone determined by the volume.
Exactly. It is not just also the volume, but it also is the demand zone is basically where just think of your demand zone is that area that's going to get people excited about buying. Like, just think, if you were, wanted to buy some Jordan bread, and maybe the market price for them is, let's just say, $100, and that's just what they sell for. And as they get priced up, less people become interested in it. But at some point below $100, you're going to get a lot of people that will come in and start buying and stuff. Why? Because they look at that as cheap. Because for the past 6 months, for the past year, or whatever time it is, those Jordan breads have always been $100. And now an authentic site like Nike or StockX, they got them selling there for $80. Like, so when you see a lot of demand coming in to buy a particular asset, that's your demand zone right there, when there's an unusual amount of buying power. So this is your demand zone here on the daily chart. So now we move up to the 4-hour chart here. And again, we're going to shrink this down. This is intraday for any guys that look to where they want to start maybe trading intraday, which I don't recommend. For starters, I would highly recommend, new traders and stuff look to make purchase and hold, look to be a long-term investor and not look to make, trading in and out until you become a better trader. But we're going to shrink this up anyway, because this is important, because it helps you to kind of understand intraday trading. Each of these candles represent a 4-hour window, a 4-hour time frame. Let's see if we can stretch it out. So now, as we can see, this candle right here, we're going to go back to Friday, which is February 4th. On the 4-hour time frame, you can see the bullish engulfing candles of 3 consecutive days. Friday, you see all this Friday, and then you go into the weekend, and you still, although the volume has went down, but there's still a lot of bullishness. And then you see consolidation here. Remember how when you see trading prices, it's trading sideways. There's no up and down movement. This is the weekend. This is off February 5th all the way through February 6th. So all, late Friday night, Saturday, Sunday, there was just consolidation, just trading sideways, all in a very tight zone. And then we get here to February 6th, 3 o'clock in the afternoon, and then you can see now another bullish candle and stuff. You see the demand and stuff is increasing again. And then we roll into Monday morning, which was yesterday. And then you can start to see that even still, that it's still trading above the moving average. And you see these another bullish green candle. And then now, here we are today, February 8th, and we start to see a rescinding of Bitcoin is now coming back down to its moving average. The EMA here is just sitting on there. So the question is that, where do we buy at, and are we interested in, or do we wait until Thursday to determine which way the market is going before we jump back in? So I'd love to hear from you guys of what you think.
So AB is chatting, it depends. We're waiting to
Hold
find
on,
out
AB.
what.
I'm sorry. He said it depends. What
Yeah,
does it depend?
AB, yeah, we're waiting to see
Oh.
what he decides. It depends.
Okay.
I don't see
All
anything
right.
else popping up. Gavin, if you want to unmute AB, that's fine, or Gavin or Lorenzo, you can unmute yourselves and speak.
I'm not really sure. I hold Bitcoin long term, so
Quick
I believe it's
analysis
always
of
gonna.
looking at. Oh, I'm sorry.
Yeah, no, I see what you're saying. Like looking at the volume, um, and what is this what you have right now? What's the time span for this?
This right here is on the 4 hour. And if you guys want, we'll go down to a 1 hour if you want. This is the 1 hour chart here. Actually, let me show that up for you. So this is the 1 hour chart. So now we're looking at each of these candles represents 1 hour. And try to make this larger. So each of these candles represents 1 hour. So right now we're 19 minutes. Well, I'm sorry, we have 19 minutes left in this hour candle right here.
Okay. What I can see from what you said so far, though, I see that there's consolidation happening on the left side.
Mhm.
And this is in the span of an hour. So just based on
Yeah.
that alone, I wouldn't think it would be bad to say that's going to go down because people are clearly buying it.
Okay. So
Malik,
so as you excuse me?
Malik, AB writes in the
Yes.
chat, this looks like it's on an upward trajectory. I'd say wait.
Okay. All right. So as we see right here, at 3 o'clock this afternoon, you see this this bearish candle right here. The red candle here is a bearish candle, and it's coming across the moving average. And then after that, we see every hour this evening, we saw Bitcoin now closing below the moving average. Then we saw some consolidation around here that Lorenzo mentioned, and then AB mentioned about a bullish candle. So now we see this bullish engulfing candle come up, but there's two small bear candles that happened within the past 2 to 3 hours. So this is on the hour candle right here. So what the concern is now is that this candle here, do we think that Bitcoin is now going to do a reversal and come back down to this support level right here? Or do we think that it will continue to be bullish and go up? All right, so that's the 1 hour candle. So let's go down to the 15-minute candle. This is the 15-minute time frame. So each of these represents 15 minutes. Okay, I'm going to stretch it out. So now we can see now what Bitcoin is moving. Like each of these represent 15 minutes. And look, if you look at the stair steps on it, you can see how the bearish pull down. And then you see this consolidation right here. And then it hits the moving average. Then you see this impulsive move, another bearish impulsive move down. Then you see consolidation. It hits the moving average. Then you see another bearish candle pulling Bitcoin down again. These are all sellers that are coming in. As soon as it sees Bitcoin hitting the moving average, you see that the bears are just coming in. Every time they see Bitcoin hitting the moving average, the bears are coming in and they're selling. You see high selling value every time it hits it. But when it hit it again, actually, we saw some consolidation here, and then you see the bulls come in, and then now they begin to take over. And then they take over and they go above the moving average now. But then you see some consolidation right here again. So here we are on a 15-minute time frame. But also remember, here we are now, it's New York time, 6:45 p.m., but it's 6:45 a.m. in Asia. So I'm thinking now, okay, and most of the cryptocurrency traders, more than 60-70% of them are in Asia. So, but you can see that the volume is low. So even though Bitcoin is bullish, I'm looking at it, okay, yeah, it's bullish, but it's still only 6:45 a.m. in Asia. They haven't really started trading yet until 8 p.m. our time. So in another 1 or 2 hours, say 8 a.m., 9 p.m., 10 p.m. our time, which will be morning there, and then that will be a better indicator to kind of understand where this market is going to go. As you can see now, there's a bearish candle that's trying to form exactly as we speak right now. But the volume is still incredibly low.
I have a question.
Sure.
So I'm just thinking, these trades that we're looking at aren't necessarily individuals who are trading at this specific moment, but it could also be like limit orders people have set out like in advance, like being executed, right?
Exactly. And remember, that's how we talked about that in previous classes, the importance of doing limit orders. Is why? Is because you want to try to get the best price that you can possibly get is by putting in limit orders. And right now, cryptocurrency, the most of the traders that are in cryptocurrency are retailers, are individuals, are family offices that are trading. But now we are beginning, as everyone knows, that institutions and Wall Street is beginning to take a step forward within to the cryptocurrency ecosystem. But even still, the bulk of the traders in the industry are individual, are retailers. And most of them are on the other side of the globe in Asia. So I share that because those are the kind of factors and things that you think about and stuff. But I'm glad that you bring up the point about limit orders. This is why you put in limit orders and stuff. And after you do your due diligence and your analysis, and if you guys can see down here, do you guys see this red line down here, ATR 15 EMA over here to the left at the bottom? This indicator right here shows you every 15 minutes of volatility on Bitcoin. And if you the guys didn't learn anything else in this class, this is a very important indicator, not financial advice, but for educational purposes. This is an indicator that I use to place limit orders. And this is something that could save you a lot of money and make you a lot of money. This indicator right here, if you are a long-term trader, by using the ATR. This is one of my favorite indicators. And again, there's many others that I use and stuff. And indicators, at the most, you always only want to use 2, maybe 3, but that's it. Too much analysis leads to paralysis. You just get paralyzed and you just have like too much stuff on the screen. So you only want to use like 2 or 3 indicators to make a determination of when you should enter into a trade or when it's time to exit. So, and also based on what kind of trades and stuff that you're making. And how do I get this thing off the screen? Let's see, I want to show you guys something else, some trading strategies. I can't get this thing to move out the way. All right, so listen, I'm gonna make it here. We'll do one here. Are you guys, actually, I should probably ask you guys, are you guys interested in just seeing another trading strategy?
Yes, please.
Okay. This is the one I want to show you is what trading strategy you can use for scalping on a 5-minute and a 1-minute time frame. 5. So we're going to put 3 moving averages up here, a 5 EMA, we're going to do it, 8 EMA, I'm gonna do an 8 EMA. And we're gonna do 11 EMA. Okay, and the colors I'm gonna use green, and we're gonna use yellow right here. I'm gonna use yellow. I'll make it a little fatter here. The yellow we want to use here. And let's go. We're gonna do a 5 here. And we'll do an 8. The 8, I wanted to do that yellow. And then we're gonna do another last one. It's gonna be 11. This is gonna be red. I'm gonna do that red. And input, we're gonna make that 11. Then we're gonna go off to weekly. We're gonna go down to the 5 minute. Yeah, we're gonna stretch this out. Bring it back. So bring it in a little bit. All right, everybody still with me here? I didn't lose anybody, did we? Everybody still here? Okay, so what are we looking at now? We're looking at the 5 minute chart right now. And we have 3 moving averages on there. And then again, this is just, we have the 5 EMA, the 8 EMA, and 11 EMA. Now just think if these moving averages are taking, the 5 EMA is taking the last 5 data points. So we're just taking the last 5, the closing price of the last 5 candles and taking the average, but the EMA gives more weight to the most recent candle. So what does that tell us? So it tells us this is the closest, when you go to do a 5 EMA, this is going to give you the closest average to what the actual price is. And the more data you go out, meaning the 8 EMA and 11 EMA, the more you go out, the less is going to be, that average price is going to be away from the actual price. So where is it? So why did I do that? The trick is to look at the green line, is to look at the 5 EMA. Why? Because that price, that moving average price is the closest to the actual price. So whenever you see the green EMA below, you know that the price is going down. So this is an indication when you see a crossover, sometimes they call it a death cross. when you see the 5 EMA go across your 8 or your 11, that's an indication that the average price is going down. If you're a scalper trader and all you're doing is just trading short time frames, but that's an indication for you that it's time to get in. And that means it's time to get in the short. And as you can see, this is your signal. If I was scalping and stuff, I only like to scalp when I see that green line clearly crosses here. As you can see, there's a bullish, excuse me, I keep calling it bullish, the bearish candle here, but you can see the green line hasn't actually crossed it yet. But this is, if you want to be preemptive and jump into a trade, you could have jumped into this trade here and you could have shorted Bitcoin at 42,212 and you could have rode that short all the way down to here, 43,880 if you wanted to ride it all the way to the bottom. Now, if you just want to follow that green arrow, just look at it, excuse me, the green line. That green line that's giving you the bearish signal on Bitcoin, you see how it goes. It's still below, 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 below. But right here, it begins to cross back over. And that's the signal to get out if you're shorting Bitcoin. It's time to get out. And you also make, but if you wait that long, just look at all the money you would have lost here all the way up here. You would have lost out. You would have made money and then you would have sat in that trade and then you would have lost, gave it all back to the market by trying to ride it out, being too greedy. And that's why when you get into trades, it's so important to know when you want to take profit. So you would do your calculations, your percentages. You would go into saying, and when we talked about in the previous time frames of knowing what your support levels is and what your demand zones is, or just if you're scalping, just what your take profit is. Like when you are scalping on a regular basis, depending on the time frame, like you already know that Bitcoin may move 1 or 2% or 3% on a certain time frame. When it hits that time frame, exit. Like take your money and go. Like just think you had this huge bearish candle that came all the way down from 44,000 all the way down to $43,875, what's that, about $200, $300 in a matter of 5 minutes. Like take the money and get out. That's when you get out the trade there. But sometimes people get greedy and they don't, their emotions take over and they wind up giving it all back to the market. And it's not until they start seeing their indicator go back across, and this is when they now decide to get out. But look how much you gave up. You gave it right back to the market. And that's why we talked about trading plan in our previous lessons and workshops. We talked about having a trading plan and having a strategy. That's why this is so important. Because you can see how emotional that you could get caught up in a trade when you enter into a trade and you're like, damn, I'm winning right now. You get in there and you just keep seeing Bitcoin falling, and you're shorting it, and you're just money, and then all of a sudden the money just stops and it does a reversal. And just look how fast that reversal happened. You had a bearish engulfing going down, and then 5 minutes later, a bullish engulfing going right back up.
Hey, Malik, Gavin had his hand up.
Oh, I'm sorry. Go ahead.
That's okay, no problem.
No, that's fine. I just had a question. I was wondering how fast or how short was the time frame that you were shorting it? Like you said, it was like a few minutes, right? For at least for this example.
So this is usually when you do scalping is usually for 5-minute time frames, 15-minute time frames and stuff with scalping. But for long-term trades and stuff, you can actually, some people short, are swing traders, like you short, for 8 hours, for 24 hours, or 2 or 3 days, people short. So that depends on what kind of trader you want to be. So here's another one right here. This is the example I gave you guys was for taking a short. Here's if you're bullish on Bitcoin and you want to scalp and go long Bitcoin, here's a crossover here, a green EMA crossing over here, and here's a clear cross right here. And you see nothing but bullish candles all the way up. And just look how far you could have rode that trade from 43,057 all the way up here to 44,254. So going into it all, I would recommend you want to know what, before you even enter a trade, you should know when you want to get out. You should know when you want to take your profit. And that just eliminates the emotion and losing money and just, you know, making mistakes. Is to know when you want to get out and try to not be emotional about it. Just to try to be methodical in your trading. And that's, you know, the importance of having a trading plan. Any more questions, guys?
No, sir.
So, you know, so now, you know, just some homework for you guys is to be on the lookout for the CPI, which comes out on Thursday at 8:30 in the morning. And just kind of look, you know, Thursday morning, you can use your phones and just see what Bitcoin, what the price was like before and after. And then just kind of monitor it throughout the day. Usually throughout the morning hours and stuff will be a good indicator, but then you can kind of see, well, how did it perform for the remainder of the day? But I believe that a lot of traders and stuff are looking for Thursday for those economic indicators to come out about the consumer price index to determine, will it be a reinforcement that the Fed needs to raise interest rates comes March, or will the Fed not raise interest rates and see that the economy will correct itself and not raise it? So I believe that this coming Thursday is going to be an indicator of which way Bitcoin will move, and we will start seeing some acceleration, whether it, you know, you see a reversal and it goes back down, or whether it continue to go up and we'll see sort of a boost or a faster momentum in either direction, I believe, based on Thursday morning's indicator. So that's it for today's workshop, guys. So, you know, if you guys have any questions, definitely ask them now. But, you know, this was pretty much today's workshop, was specifically focusing on utilizing TradingView and how traders use it based on, we looked at some of the longer time frames for people who are investors who are looking at it on a monthly, on a weekly, on a daily. And then we saw some shorter time frames for people who intraday trade. And then we just saw, this is an example of a very simple scalping strategy that you can use for scalping almost any asset, but, you know, this one we use here for Bitcoin, a scalping. And this is scalping on, you know, on a 5 minute and 15 minutes. But this is something that I would not recommend for beginners. But, you know, I wanted to show you guys of just how indicators work and then how people use them for trading and stuff. But when you're just starting out, again, this is not financial advice, but for educational purposes and stuff, when people are first getting into investing and trading and stuff, I highly recommend you start off with a long-term plan. We talked about building a portfolio. Excuse me. In some of the previous workshops, we talked about building a portfolio, and I gave some examples of how you want to build a portfolio of, you know, anywhere from 70 to 80% of your portfolio being a mix or one or the other of Bitcoin and Ethereum. And once you establish that bag, and then you begin to now invest in some altcoins, and then invest in some DeFi. And then even that, I would only recommend like 10% of your total trading account invested in altcoins, and then, you know, 10% towards DeFi. But I would recommend as much as 80%, you know, of your bag is in Bitcoin and Ethereum, because that's the foundation of cryptocurrency. And as you become more educated and just much more of an astute investor, and then you can look for, establish your own strategy and your own plan of how you're going to go ape in on a particular ecosystem or a particular protocol because of some research and stuff that you've done, and you're bullish on XYZ altcoins, and then you begin to maybe shift your portfolio and stuff. But I would recommend starting there. Any questions? Any more questions, guys? And did I catch all the questions in the chat?
Yes, you did.
Okay, cool. And just, continue to spread the word amongst your community, your family, your friends and stuff. If they have any interest in crypto and they want to know where to start, like, tell them to join the Discord and just stop in and start asking questions. And we'll build together. So that's it for me, guys.
Thank you, gentlemen.